Yeah, but peace and love to that, my brother. That's dope. Up and coming hero there. He's getting big. Oh, appreciate you. Peace to the guy. Yeah, man. Yeah. Yeah, I get to see him. I don't really show my son, even if it's a picture on Instagram, I hide his face. I keep a lot of privacy when it comes to him. Yeah, bro. The new Bob Marley movie. Oh, One Love, the new Bobby. Um, who produced the movie? I gotta look into who produced the movie because they're gonna be talking about Rastafari. I just, yeah, I watch it. It's just a Bob Marley movie, so I really, I really, I want to know who's the director, who produced the movie, just to make sure I know who they are and what their intention were. Because I really rock with Bob Marley. You know what I'm saying? I'm not a Rastafari. I'm 5%, but however, I rock with a lot of Rastafari. We have the same views. We Bugs, Melena. Oh, what's up? Melena in the building. What's up, Melena? I'm Jamaican and my classmate is in the movie, in the move. Oh, that's what's up. That's peace. That's peace. Let me see. I don't know how to say too much stuff in Jamaican. When I was like 15, don't mind me. His mom would talk to me like this because I was wild. She'd be like, Moody. Well, I'm lying. She didn't call me Moody. She called me Kelvin. At the time, or they'll call me Kel the Flacco at that age. She'd be like, Moody. See, it's just I'm used to calling myself Moody now. She'd be like, Kelvin. Watch your mouth, mommy boss up your lip, mommy boss up your lip. That's all I remember. Mommy boss up your lip. I was like, what the heck? I used to be like, so my friend's name was Elton. I used to be like, yo, El, what is she saying, mommy boss up your lip? He's like, watch your mouth before she busts your lips, bro. I'm like, oh, okay. Peace, that's peace. The Marley family is in it. And then, oh, where? Oh, I'm definitely watching it then. I'm definitely watching it. If the Marley family in it, yeah, I'm definitely watching it. They approve. That's cool. That's close for real. Yeah. Peace and love, beautiful baby. Oh, appreciate it. That's peace. Peace and love to you as well. She would have, she would have, laughing out loud. Okay. You talking about the mom and boss up, yeah, she would. Yeah, his mom, she aggressive. She aggressive. All right, so let's get this party started. Do 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 do. Let me pull this up. And however, like I mentioned, because I'm getting plenty of DMs about it. I will be putting out the class. I promise you, I will be putting out the class most likely next week or in the middle of next week. For the people that, for the members that are part of the Discord, they'll definitely have the class to be able to go and review it. Absolutely. This is not something like you can watch it and get a good understanding or a fine understanding of it. However, just replaying it, and keeping it on a rotation and just getting the understanding more and more, it'll develop better. You'll have a greater understanding, and whatever understanding you have now, you'll be able to build and add on top of that understanding as well. And yes, this is on YouTube. However, however, even if you try to look up the title or whatever, you try to do, you have to have the links to this, right? It's a coaching program. Um, and even the people that have this link and things of that nature, you have to have another link to get like the other 10 videos that Rob went a little bit more in depth into the strategy that he created. Um, all right, so where is it at? Right here. Let's pull this guy up. All right. So, um, well, I'm not gonna sit here and give a whole review of what took place last time. Let's just go ahead and play it.
Hello, my friend. Rob Smith of the In the Black QuantEdge VTF here, T3 Live, with the second video, the QuantEdge 4-week coaching program. Week 1, where we're discussing actionable signals. While you take time to read this disclaimer, from video 1, remember, An inside bar must close inside, or the equilibrium is still forming. Very important. And the rev strat must follow an inside bar. That is what we are reversing. We're reversing the equilibrium of the inside bar. And now we can move along.
And now we can move on.
In the last video, we got through candlestick formations, inside bars, and the rev strats. Now we move on to the importance of what we call the flip.
Boom. Pay attention.
Okay, if we move along here here's the flip, section 4. The importance of the flip concept. The flip is what we call the changing of the new hourly bar at the bottom of the hour. Although some charting software updates at the top of the hours, I highly recommend one that does at the bottom of the hour, right, for the following reasons. First, although some may say the final hour of trading is the most important hour of the day, that is false. The opening is what is more important. The opening hour is more important because it sets up a benchmark on which we can gauge direction. Which direction are we going from the bottom of the hour?
I'm gonna be Mr. Nice Moody.
All right, for all the
because he just, I'm gonna be Mr. Nice Moody. All right, so the flip, right? The flip is exactly what he's talking about, and it's also referencing the flip hour around 10:30, right? And it also references when Moody always asks is like, "Hey, are you trading with real time or extended hours?" Why? Because that's gonna give me already your mindset on how you view the charts is so much. It's just so in depth, right? And it's just because I love navigating the mind. I love to know someone's behaviors and things of that nature, right? So, understand what he mentioned. I rewind it so he can say it. What he mentioned. Think of the market opening up at 9:30 and your bars. That's why it gapped up. Or is this? There's no gap there. I promise you, there's no gap there. You're just not looking at the right chart. You have to go to extended hours, and you'll be able to see that whole entire move. And not only that, you'll start trading from the bottom of the hour, trading from 9 o'clock to 10 o'clock, from 10 o'clock to 11 o'clock, from 11 o'clock to 12 o'clock, not from 9:30 to 10:30. It just doesn't, you don't even live your life that way. You live your life by the hour. You also get paid by the hour.
changing of the new hourly bar. The importance of the flip concept. The flip is what we call the changing of the new hourly bar at the bottom of the hour. Although some charting software updates at the top of the hours, I highly recommend one that does at the bottom of the hour, right, for the following reasons. First, although some may say the final hour of trading is the most important hour of the day, that is false. The opening is what.
And that's when you hear people talk about, oh, it's power hour, it's power hour. I've learned out of my 3 years of full-time trading how to mute certain distractions, or just, oh, this is doing this because of it. It's just, why? Because when you start to engage with the distraction, you start to become that distraction, right?
Which is more important. The opening hour is more important because it sets up a benchmark on which we can gauge direction. Which direction are we going from the opening? All right, for the rest of the day. It's also not as important as only the U.S. market, but not only is the U.S. market open on the bottom of the hour, but we have European markets close on the bottom of the hour. We have the crude oil closes at the bottom of the hour. And what that does with Europe closing creates a liquidity event. All right, once Europe closes, we're the only game in town. So we want to be aware of the bottom of the hour. That's what we call the flip. All right, because it's now a new 60-minute bar.
And shout out to Sarah. That's why she always would say the flip hour was 10:30 because well, I'm not going to speak for her, right? Because we're keeping everything original. I'm going to end up, in the mid of the course where it's like, okay, let me get on the charts and let me start showing examples and things of that nature. He's giving his own examples. However, I'll show you certain things that I do and things of that nature. However, still shout out to Sarah. And that's why she kept it so simple, right? And she would just tell you, hey, the flip hour is at 10:30, right? Instead of getting into, hey, what kind of chart how are you looking at your chart and things of that nature? Because a lot goes into trading, right? It's just when you're around an individual or individuals that truly know what they're doing, it seems effortless, right? But that's also a consistency thing.
Futures and futures related stocks, the weekly oil and gas inventory numbers coming out at the bottom of the hour. as well as their pit closes, right? We know about that. It's also important because it's the only time when a major time frame signal can be created during the day, during the trading day. Unlike the monthly and weekly daily signals that would need to form, right, as we talked about before, and then trigger after the respective time frames have closed, the new month, the new week, the new day, the 60-minute signal can form and trigger during the same trading day, right? So we can go inside on the 60-minute and form that equilibrium during the day and trigger in the same day.
You
That's why
dig?
the flip is very important, because every 60 minutes we want to see if we are setting up new actionable signals on which we're going to be able to trade off of.
I'm gonna rewind that for you. And we're able to trade off that.
Equilibrium during the day and trigger in the same day. That's why the flip is very important, because every 60 minutes we want to see if we are setting up new actionable signals on which we're going to be able to trade off of. It's also important for time frame continuities when we get to the next section.
Exactly.
For right now, we're still focusing on actionable signals.
Time,
Section 5, combos,
time frame,
combination.
time frame continuity and full time frame continuity is two different things, right? You'll normally hear all the time, and it's just like FTC and things of that nature. Full time frame continuity is referring to time frame, right? Full time frame continuity. Continuity is not, right? It's two completely different things. However, I do want to sit here and explain everything. Like he said, it's for the next section. So I'm gonna let him keep going forward. I'm gonna go ahead and grab this question that just came in. Light bulb. There you go. Now he's gonna come in and start speaking on the combo.
Increase probability by having separate participation groups trigger others. We always look for combinations of actionable setups. All right. By participation groups, I mean the representations of different time frame charts. So anybody who's traded whatever we're looking at during this month, the present month, is the monthly participation group. Anybody who has traded it this week is the weekly participation group, etc. Anybody trading today is the daily participation group. And that's why that 60 minutes important.
And that's why language is very important. We call them groups, and we say, hey, we're looking for this group, or for sometimes you hear me say time frame for the 4 hour to buy the security as well, right? And no, once you start to understand this thing, this is not just the strat right here. This is price action, right? So if you're not around an educator that's breaking things down this way, I have nothing bad to say. I would just say, please make sure that you're understanding what true price action is, right? Because price action is one candlestick.
Presents a 60-minute participation group. We look for either a combination of actionable signals, or one triggers the next and so on. One group will trigger the next. Or once a longer term signal is in force, additional actionable signals to reconfirm the signal. Remember, anytime that these actionable signals are above those triggers are in force, they are still good for that entire time frame. So an actionable signal in inside month, bullish breakout to the upside, so long as that is triggered, we have all month to look for additional signals.
Simple.
Let me show you how we do stuff around here.
Oh, we got
Actually,
an ad.
my department uses Monday.com, so I'm good. The work management.
Simple. Pull it back up.
So if we look for a combination here, it's going to be a little tight to see, so we'll go nice and slowly. All right. This here's the IBB. Okay. You can be able to see how the inside 30 down triggered the daily 1-bar rev strat down, as well as triggering the inside weekend down. It's an example how the shorter term participation group triggers the longer term groups. It's very important. This is the crux of how this works. 30-minute group triggers the daily, triggers the weekly. So what do we mean by that? It's a little tough to see, so we're going to go slow here, but this right here is 30-minute bar. You can see this inside. It breaks the inside bar to the downside. By doing so, it was an inside bar. It's tight to see, right? But it is an inside bar, and it slightly took it to the upside on the 30-minute when it did this. On the 30-minute, it slightly took that to the upside. So remember, the 1 bar rev strat is going to reverse that inside bar to the downside in 1 bar.
So here, I'll help you. He's talking about this candlestick when he's talking about the inside bar. He's talking about all these candlesticks. He's just circling this. If you have division or language, you'll be able to see what he's talking about though, right? So when he talked about this 3 bar right here and it going all the way up like that, he is talking about all of this right here and this getting stuck.
Therefore, if this goes 30 down, this combination will trigger the larger daily group by going 1 bar rev strat to the downside. This is really tight to see, so you're going to have to take my word for it. It was an inside week. All right. This 30-minute break, right? The intraday participation group.
Always remember, look at charts. Always remember when you're seeing stuff like that, it's easy to read anything on social media. When you're seeing things like that, you start to develop and start to understand, like, let's just say if it was a trend line right here, you see something like this, you know for a fact that trader's not trading no trend line. It's a broadening formation that they're trading. You know that, right? Because a trend line is not going to have two trends going that way, right? We're trying to get the top and we're also trying to get the bottom because we're looking for the whole entire range. Because we're going to also, well, I'm going to also trade support and resistance and things of that nature, right? So it's amazing when you start to understand what are things used for and what are they, because you'll be able to read it, see a chart anywhere and be like, this is what that person is doing. Oh, this is what that person's doing, right? Or this is what that person's doing, or this person is mixing this with that. And, it just gets easier to be able to decipher and be like, oh, I want to understand this or I don't want to understand that, right? And always be aware of any charts that you see from anyone that starts to change, right? You're a trader yourself. You know how hard it is to start changing things, not changing like a different strategy, like, oh, I'm gonna try this, or I'm gonna try that, is how you chart, what's on your chart, right? You want to be around consistency, right? And that's why I always was fond about Sarah Sniper's charts and as well as Rob, because it was always the same thing, right? So you'll start to see that, oh, they're always trading the same thing, right? Which is the strat.
Causes the rev strat of the daily. At that point, the daily and the 30-minute group then trigger the weekly inside bar break. All right. The 30-minute group causes the rev strat for the daily group. The 30 and daily group then trigger the weekly group equilibrium break to the downside. In this next combination, the daily and weekly inside bar breaks to the upside are already in force. This is what I'm talking about, not just always causing it, but the reconfirmation. And the 15-minute momentum hammer reconfirms those breaks. What does that mean? That means this inside day that breaks to the upside here then triggered the weekly participation groups by taking the inside week to the upside.
Exactly.
So oftentimes people misconstrue that they have missed this move, right? They didn't get the initial break.
Pause that. The internet keeps cutting. Okay. Peace. My bad, y'all.
On the day, they didn't get the initial break on the week. That's not true. These are still, this signal is in force for the rest of this day. This signal is in force so long as the week is still the same week and is above the previous equilibrium weekly high, which then gives us the opportunity to look for reconfirming signals. In this case, the momentum hammer here, which goes in force above the.
And you see how I caught this momentum hammer? That's because I study him so much. Both of these are momentum hammers. I would have wanted the bottom break.
Hammer. At this point, we have 3 actionable signals in force, thus the combination. Combinations may also occur not just in various timeframes and setups in one stock, but across asset classes as well. When the broader averages, key each sector ETFs, and most stocks trigger actionable signals in the same direction, It's known as a simultaneous break. This is one factor that makes the flip so important. On each flip, we can evaluate how many new potential 60-minute actionable signals have formed. Oftentimes, we'll see a simultaneous break across the broader averages, where we'll have the S&P, the Dow Jones Diamonds, the small cap IWM, maybe QQQ, all go inside 60, all right? All go inside 60 at the same time. So once a few of them start to break, we can expect the rest to follow suit. Everything is simultaneously breaking in the same direction. All right. Can you trigger? We can do so. Others will follow, right? Major equilibriums, bro. This may occur across the broader average or be sector specific. So if it's the broader averages, right, breaking to the downside, simultaneous break to the downside, we can at that point also look at all the stocks that are already enforced to the downside, because there's no reason to believe they're going to reverse when a simultaneous break occurs to the downside. Conversely, if we have all these 60 minutes or signals breaking to the upside in the broader averages, we can look for stocks that already have actionable signals enforced to the upside, because there's no reason to believe that they would reverse at that time. Oftentimes we'll have a sector specific simultaneous break. What that means, all major signals break in the same direction for a major sector ETF, as most or all of the stocks follow suit. So what does that mean? What that means is sector specific, say FAS for the financials, XLE for the energy names. If all of these line up with actionable signals breaking in the same direction, it's called a simultaneous break. It's very important because we can see everything breaking in the same direction. So the participation groups in each one of those is helping to trigger.
So what you're understanding, that's when Moody is speaking on, like, hey, if you're trading XLE, right, for calls, you can take XLE, you can take Oxy, you can take Exxon, you can take CVX. I'll say certain things like that, and you may hear things in the world where it's like, oh, that's not true, or just because this is going up doesn't mean that this is going to go up. That's just because they have no clue about what sector rotation is, right? And sector rotation is very important. On the content that I just posted on Instagram, I'm speaking on it, right? And letting you know that trading is extremely easy once you start to do that, right? If you're an individual that's like, oh, let me look at NVIDIA. Oh, let me look at, no, I was about to say NVIDIA, AMD, because I understand how to trade. If you're like, oh, I'm gonna look at Bank of America. On top of that, I'm looking at Bank of America. I'm looking at, gosh, man, it's so hard to do. I was gonna say Costco. All of these are still, Costco is pushing out of the water. However, it's best to trade in the same sector. You may hear like, oh, well, you got to hedge or this or that. That is a lie, right? Do you even have enough money to start hedging, right? Like, come on now, be serious. Like, I only been in this game for 3 years, right? Not including anything that when I was buying shares, because I had no clue of what I was doing. Come on now. I was 19, 20 years old. I told you I'm from the Bronx. Just do the knowledge on that, right? So keep that in mind when you're trading, right? When you're trading, all right, you'll hear me talk about SPY and NQ together, right? Because I know that they're going to move in the same direction, regardless of the fact. However, NQ is going to move more because it's more volatile. There's going to be more money in there, right? It's more volatile, so it's going to move a little bit faster than SPY. But SPS is going to move faster than SPY because it's more volatile as well, right? So if you're trying to make a bigger buck and I'm trading SPY, you can trade SPX, right? It's just all on what your risk is, right? Am I gonna just run and jump to SPX because I hear, oh, it's better on tax, or it's this or it's that? No, I'm not going to reinvent the wheel. If you see me trading options, I mean, not options, however, futures, that was last year. Look at how long, and it wasn't a long period of time. I wasn't talking about it. I was doing my own thing. I was trying to understand the market a little bit more and what were my best entries and the styles that I utilized. What were the best way to have it so that I can be profitable in that market as well, right? However, it takes time to be able to do so. You can't just be jumping from this to that, from this to that. And that goes right back to the sector rotation. When you know your sector rotation and you know your sectors, you start trading in that sector. And it's easier to start journaling and start understanding this is why I lost. Why? Because you're going to look at this, and then you're going to look at that stock that you were trading, you're going to look at that stock, and you're not trading the same thing. So you're throwing yourself off. How are you going to tell yourself, well, I'm consistent. I took 5 trades, and there are 5 different types of trades. And you have to understand it. So I'm rewinding it just a tad bit right now. Oh, look, I put it on 369. Ain't that?
Not getting it.
Oh, it didn't play. Hold on.
So the participation groups in each one of
I'm gonna
those
leave the damn thing again.
trigger the others because it's triggering the ETF. It's triggering each individual stock. Simultaneous break.
Next day when you leave.
Oftentimes this will occur at the beginning of the month or the beginning of the week, the beginning of the month, because there'll be new allocations for institutions going into certain things. Oftentimes the beginning of the quarter can be a very strong day, right? Because a lot of institutions will be coming in.
And I'm shouting out all my mentors. And that's why, you know, I love being mentored by Mark Monroe. And I love just his content and just communicating with him. Why? Because let me just play it one more time so you can hear it.
For institutions going into certain things. Oftentimes the beginning of the quarter can be a very strong day, right? Because a lot of
The beginning of the quarter could be a very strong day, right? And also the beginning of the month. However, bringing back Mark Monroe, that's where I get the rolling forward strategies from. Why I am always swinging anywhere between 3 to 6 months, right? That's not leaping, that's just swinging, right? And you're just swinging for the quarter, understanding the fundamentals of the company and looking at the winners and knowing that the losers are going to lose, right? And dumping your money into those winners.
institutions will be coming in to buy their new quarterly allocations, and we will see the monthlies, the weeklies, the dailies, and the 60s all breaking in the same direction. As far as the flip is concerned, that's what we're looking for, an intraday simultaneous break, which means it's the 60s on their own are breaking. And we can take those longer term time frames to see if that's confirming or negating what we know to be true. If the market is already going up and we have a simultaneous, and by going up, I mean defined by on all time frames going to the upside, and most actionable signals are already triggered to the upside, that's reconfirming what we already know to be true.
Exactly.
If the most actionable signals are triggering to the upside and the 60 breaks to the downside, all right, that's negating what we know to be true. Actionable signals are going to continue to confirm or negate each other, right? We want them to confirm. This will be more important as we get into the discussion of time frame kind.
Rosa, blockchain babe, if you're on here, just a quick listen. When you heard me talking about on a chart class and he was like, Moody, can you please re-explain that? Can you type it out? When I was working on the candlesticks, that's what I was talking about. It negating when you're seeing, like, let's just say I was speaking on 2 different hammers, right? They could be hammers or pin bars. Like, say we found the hammer right here, you know what a hammer looks like, and then we found a pin bar right on top, the next candle that printed out, right? That's negating.
Annuity.
Gotcha.
Section 6, the measured move. Although highly correlated with the other truths, oftentimes
This I will show you on the chart. I'm gonna let him do his original to it. You will also see me utilizing his original and then my sauce to it, right? And a lot of you guys see me utilize it. There's more that I utilize that for, not just bull flag breakouts.
we look for actionable signals to trigger a measure move. This occurs when an actionable signal triggers after the price makes a quick advance or decline. What do we mean by that? Measured move. It represents a brief hesitation before the strong trend continues. It's called a measured move because we can gauge the magnitude by using the previous move, then projecting that to the next move will be of equal strength. So what do we mean by that?
That right.
You'll see the strong down move, right? Inside bar, then triggers equaling this move. This is the measured move. This distance will be then traveled here. Now, this will also be affected by time, right?
Facts.
However, when we combine the other universal truths, we will have higher levels of probability on when this is going to work
Yeah.
and occur in this manner.
Universal truths.
Introducing
Man, we
Iron
got some
Beam,
of these
a bright
ads,
choice
man.
for futures trading.
Upright
Iron
choice
Beam is an
for futures trading.
industry-leading broker catering to traders worldwide with 24-hour live support and the free Iron Beam platform. You can trade the
The importance of time, section 7. Although we will cover time in the next video, when actionable signals trigger is important. Ideally, we want actionable signals to trigger as soon as possible. The reason for this is that because it gives us more time to get reconfirming signals to enter or add to our position.
Exactly.
Just like we just previously saw, all right? Because actionable signals are only enforced while the triggering bar is still open. The closer we are to the end of the time frame of that bar, the less time frame we have to work the signal. So just like those examples I just previously showed you, so long as that monthly break is in force, we can look for those shorter term weekly, daily signals. Now, if we only have 1 day left in the month, that doesn't give us a lot of time to work with. So ideally, we want actionable signals.
That's like somebody finding an actual signal and you have 2 days and they're like, oh my God, man, sit down somewhere. What are you talking about? Why is it? Why? Because you found an actionable signal. The actionable signal is not actionable because you found an actionable signal. It has to be enforced and enforced with time. You have to measure your move. You have to understand like the market structure and all of that.
Signals to break as soon as possible.
And that's just for people that be, you know what I'm saying, making content or whatever the case may be, and they'll just circle an actionable signal. I knew because of this. Go to the chart and go find a whole bunch of them and see how they still fell. It's not because of that. That's when you know that that person knows because of hindsight. It happened, you've seen it do that, so you know to circle it.
The turnaround Tuesday phenomenon. If you've traded for a while, you may have heard this term. I'm sure you have. Turnaround Tuesday. When the market goes one way on Monday and turns around the other way, we know why this works. We know why this happens.
Why does Moody trade, live trade? We heard him say something. You know, you got people waiting for power hour. That's not when the move happens, and that's not the best time to trade. It's the market opening. Then on top of that, when does Moody trade? Think about it. I may not talk the strat. I'm literally living it and trading it. It's just I am on a 1 minute and 5 second now. I done moved myself to the 30 second, 5 second because I like to be completely different. I don't like to look like anything.
Happens and how to quantify it, right? Basically what it is, it's a combination negation reversal. I talked about signals confirming or negating the move because all actionable signals will confirm or negate what we know to be true about price direction. Monday night's inside days and rev strats are what causes this phenomenon.
Equilibrium.
For instance, say the market is up on Monday, took out previous Friday's highs, strong enough to take out previous Friday's highs. Any ETF or stocks that formed an inside day on that Monday were therefore too weak to rally with the market. No one can dispute that. They weren't strong enough to take out the previous highs of Friday when the market did. So should the overall market start to give up those gains on Tuesday, all of those names are actionable signals that suddenly trigger to the downside. That's what triggers the reversal break.
Yeah.
We know that, all right? That's the guts of a turnaround Tuesday phenomenon and why it's important when things happen to confirm or negate. What it's doing is negating the initial move of Monday. And that's why when we get to time frame continuity, we will talk about the importance of the second week, the next month. All this stuff matters. But for right now, it's the actionable signals that we want to focus on. And that's what causes the turnaround on Tuesday, the inside bars and rev strats of a Tuesday that negate Monday's move.
Mm-hmm.
So once again, summation. It is very important to remember that we do not have to catch every actionable signal as soon as it breaks, right? when people first come to me, that's a common misconception. You do not have to catch the initial break, right? Although we enjoy those combinations, as I showed you, where one group will trigger the next. And our go-to buy and sell list, if you will, is a list of all stocks that have actionable signals in force.
Mhm.
So once again, this means so long as the monthly setup is in force, we have the rest of that month to look for additional actionable signals on shorter term time frame to reconfirm that break. This is also true for all actionable signals. The triggering bar of an actionable signal is still live. We can look to trade it. It's a matter of how much time do we have, all right? It's all very important stuff.
Very important stuff. How much time do we have, or are you gonna wait for the candlestick to close? You don't want to do stuff like that. I promise you, I'm trying to help you as much as I can. You want to trade with the money, not when the money says, hey, let's take profits. We'll see what's going to happen. Let's see if the other participant groups are going to add so we can add. Right now, we got to wait for that actionable signal.
All right. So once again, we started off with understanding that the bars must close. All right. We understand that a rev strat must follow an inside bar.
The bar must close, meaning I'll bring him back, I'll slow him down, meaning the equilibrium. And I'll rewind it so you don't get confused because he may have not said equilibrium, right? Letting you know he's talking on like his mindset because he was speaking on it earlier. He's speaking on the hour, right? So if we're seeing a candlestick that's stuck inside of the hour, right, of his previous candlestick, and it still hasn't closed, it's still forming equilibrium. Now, if it's closed, now we know it's an equilibrium, and now we know what to do from there.
All right. We understand that a rev strat must follow an inside bar. The importance of the flip as it pertains to an intraday actionable signal. The importance of combinations to cause one participation group to cause another participation group's actionable signal to trigger, as well as reconfirming actionable signals that are already in force. A measured move to help us gauge magnitude, which we will touch back on as we get into the other truths because they matter in that case. And the importance of time on when things occur, which we will also be covering further when we get to the other universal truths. So in this next video, we're going to look back a little bit at the historical significance of these signals, right? And then get to what's happening now. Because when I'm pointing this out to you, I want to show you recent history, how this has played out so often, so you can visualize it and see what really happened as opposed to just these examples. This concludes video 2. I will see you in video 3.
First off, if you haven't made money with AI yet, don't worry. AI is the biggest.
Hello, my friend.
That's video 3. That's for the next class. The next class is quite longer. It's I would say it's a little longer than the first class, and it's definitely longer than the second one. Maybe like 20, 25 minutes longer. Does anybody have any questions? Any questions? I feel like that was light. That's why I said I may add on and like do like I don't know some charting or teach you guys something. However, excuse me. However, do you guys have any questions about what you guys learned?
Hey, Moody.
Hey Judy, what's going on?
That's good. I kind of got on a little late, so I'm not sure what you covered in the beginning, but you don't have to go over it again. I was just asking, what did you go over charts or did you like just do paragraphs like that?
Nah, I ain't go over charts yet. I'm really wanting to get into the charts. The
Okay.
market looks beautiful.
All right, awesome.
Yeah,
Thank
you're welcome. Nah, we'll definitely get into the charts. We're gonna have a little conversation. You said the flip is around 10:30. Oh, that's me adding on to like the flip. Like he's just explaining. Hold on, let me stop this video.